All right, guys, welcome to the channel here at Live Life in Maine. Today is Veterans Day, so I thought it'd be no better time than to interview one of my preferred lenders that I work with. We did a question and answer session a couple of days ago, specifically about VA loans. I asked them, I don't know, 10, 11, 12, 13, 15 questions. We got into a little bit of banter about a couple other things, but found it to be very informative. If you're looking to buy or sell in Maine and you're thinking about using your VA benefits, regardless if you're a veteran or you're active duty and you're getting stationed up here, then this video may be for you. It does uncover some of the questions that a lot of kind of first-time VA loan users have. So I found it to be informative. I think it's only going to help you, the more educated you are in terms of VA benefits is only going to help you down the road, even if you decide not to use it right now. But this episode is really about education and information and, the Q&A with Chris, who's with CMG Home Loans. So I hope you find this enjoyable. And if you're looking to do this, then I would encourage you to subscribe to the channel, tap that bell to be notified, and we'll get after it right now. Hey, buddy, what's going on?
Buddy, I'm just sitting here in the lab, just doing mortgage loans. You know what I mean? Just doing my thing. How about you?
Oh, man, I'm loving life. I got a ton of clients I'm working with, a ton of them that are in the VA space, right? Because as you know, I'm a veteran, so I work with a lot of veterans, and I get the question asked more and more, what's going on with VA loans and how's the VA loans work in Maine? And I don't know if it's that too much different from any other state, but I know you have a lot of expertise with VA loans. I know you've worked with a lot of clients. We have some clients that we've worked together with on VA loans. So I thought it would be good if I brought you on, the lender, you're an expert and you've been doing this quite a while. Tell your story a little bit about how you get into the industry, what you're doing today, how you're helping veterans, and then maybe ask some questions, how that's going to look, and we'll get it up and get rolling. But I do ask one question for you. What's going on with your fantasy team, man? Your fantasy team is not looking really good. What happened?
I mean, Pacheco got injured early.
Yeah.
Richardson was a miss. I just, the kid in New York, the wide receiver, he's injured.
Yeah.
So it's just like, how it is to chase when you're playing fantasy football.
Oh, man. Is the league that we play in the only one you play in, or do you play in another league?
So I have 4.
Oh, Jesus. My wife would kill me if I was in 4 fantasy leagues, but yeah.
Well, full disclosure, I don't like that I have 4. Well, I don't like when I have 4 because of situations like we have in our league.
Yeah.
It's because you're chasing the waiver wire. You're looking at other teams, convincing yourself that you can send out your garbage to get somebody's, flowers back. It's it's one of those years for me.
Yeah, no. Well, at least you're not a Raiders fan, man. So I have subscribers that comment, Raiders, how are you a Raiders fan? But anyways, so welcome to the channel, man. For all of you who don't know, this is Chris Bedard. He's with CMG. And I'm going to just let him kind of introduce himself and talk about himself real quick and, how long he's been in the industry. And we'll get into some questions and answers about VA loans.
Well, first of all, thanks for the opportunity.
You're welcome.
I've been impressed with what you've been building here. And I think what you offer for veterans is pretty impressive. It's an interesting business that we're in, and you overlook sometimes how important content is, but it's obvious that you don't. So I can tell you that my story is 20 years long now, this month.
A long time, man, in this industry. You've seen a lot.
I've seen a lot, but to make it 20 years, there's the ability to drive in business and get business done. There's some luck with that. The economic cycles have been challenging over the years, but I guess I'll start from the beginning. So this is This is an interesting story. It starts with a guy named Frank Watson. I won't make it too long, but I had sort of this entry-level sales job coming out of college. I went to the University of Maine at Farmington. Okay. Got this sales job, and one of my accounts was Lenders Network. It's a Portland, Maine-based company. They are no longer in business, not because they failed, but just those guys had a good run. They're older than me. They're doing other things now. I went to one of the owners' houses to hang out one day just because my other job sort of created a friendship with these guys. And I looked at Frank and I said, Frank, I think I'd be good at this. He kind of looks at me and he knows it's coming. I'm about to ask for a job. And I asked it with confidence. He immediately looked at me and said, well, me and my business partner weren't going to hire any rookies. Because Scott, at that point, man, they are about 30 LOs deep.
Yeah.
They're pumping. This is 2004.
Yeah.
You know,
Oh,
I'm
yeah.
just a kid coming in, and he's like, we don't have time for you, is
Right.
basically his answer. So I said, Frank, I had a friend who was working for him that was vacating the business. He had an amazing run. He was, heading out to California. And we had the same sphere of influence. And I said, look, I think I could slide into this and I think I could do it very well. So he said, let me talk to my business partner. So he made me wait almost a week.
Made you sweat it.
He made me sweat it. And you know
Yeah.
what? I
Yeah.
respected it.
Yeah. Yeah. Yeah.
So he calls me up. He said I had a job. But he said, look, we're going to put you in the bullpen. You're not going to get an office. We're not going to answer questions. I mean, that was just his nice way of saying, hey, look, don't take a bunch of my time.
Right.
We're here to support you. But yeah, they put me in the bullpen. I had this sort of extra computer that people hopped in and out of. Um, and what it was back then was it was a thing where we were a brokerage. So all of the wholesale lenders that they were signed up with, they had account reps because everybody was going in and out of that room. The copier was in it. Nobody wanted to deal with me. Um, it was cool. Somebody, a couple of them kind of gave me the time of day, but there wasn't enough there to say, hey, Chris, here's how you do a loan. So it was actually before Countrywide sort of died 4 years later. It was the Countrywide rep named Wayne Ferguson. Shout out to Wayne if he ever listens to this. He's now retired. That guy gave me my shot. He sort of answered all my questions. I sort of learned the platform of Countrywide's website, which ironically is similar to the one I use now at CMG. There's some cross-pollination with some tech guys that used to be Countrywide guys, now CMG guys. And yeah, man, that was my break. I became a loan officer. I got lucky where like I found a piece of business right away, and I've gone 20 years where I've only had one blank month.
Wow.
And
That's
yeah,
impressive because I know a few lenders out there and they can't say that. Right.
it's
1 month and 20 years is impressive.
You know what it was too? It was during 2017 first quarter when we had such a severe inventory
Yeah.
issue around
Yeah.
here.
Yeah.
That was fun. I mean, it's similar to what we're dealing with now, but that was weird in 17. But yeah, so I get that job, and then a week later, my now ex-wife, she's like, Chris, I've got some news for you.
Oh man.
You're gonna be a father.
Oh man. Yeah.
Yeah. So
Yeah.
you could see the motivation of a
Yeah.
100% sales job, commission
Yeah.
job.
Yeah. Yeah.
And now my daughter is 20 years old and she's a junior in college.
Yeah. 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 I mean, that's quite a risk. I mean, I didn't get into I got into the real estate industry in 2013. But as you know, I was developing a mill with Doug Sanford and others. And
Yeah.
I was still in it pretty deep, but I wasn't on the residential side like I am now. But I knew when I wanted to go full bore, which was, 4 or 5 years ago, this is all I was gonna do, right? I was gonna kind of get rid of all my other stuff and just do real estate. I was doing some IT stuff and stuff, but really, it was my last career, right? But I had the funds and the financial means to make that happen, to build, my base and to build my clientele. So I can't imagine, you know, new kid on the way, 100% commissions. A lot of people can make it happen, but that's I'm sure you had to grind quite a bit to get it going.
It, 20 years later, I think what drove that, and I think it's a couple of things. It's like my sports background.
Yep.
You're used to persevering, you're used to losing, you're used to turning around and trying to win. And like, let's be honest, I was in my early 20s. I was naive.
Hmm.
Um,
I know that feeling.
Man, you got a lot of testosterone too.
Hmm.
So it's like you're just focused on actually making it work.
Yeah.
And I don't know what made it work. I just remember getting out there. I had a small background in real estate also. I mentioned that I had an entry-level sales job, but on the side, I got my real estate license. I didn't sell anything when I was 23 years old. And then the first quarter of when I was 24 years old, I sold a little bit over $1 million.
Oh,
So I'm
great. Yeah.
yeah, so I'm starting to crank, and you know how that goes when the pipeline dries up. I'm like, man, this is great. I think I'm going to make a run of this.
Hmm.
And all of a sudden, you got nothing. And
Hmm.
that's sort of when that friend of mine was leaving, and I knew those mortgage guys, and quite honestly, I saw some of the things they had.
Yep.
When you're younger, you want things.
Yeah, of course. Right. You're motivated by what could be.
Yeah, so I mean, like I said, I asked for the job,
And here we are.
and here we are. I could spin on my story all day, but
Yeah, we both. Yeah, I know. I mean, there's so many stories you hear across Maine and across this country of how people got to where they're at, and some of it's pretty impressive. I find a lot of it is just putting your head down, grinding, working, doing the hard work, paying the price, and eventually, it's about effort, and it's about you only can control your behaviors, right? So I also find a lot of people give up, right? So you can't win if you give up.
so I- that's a big part of it. And I think like my little time in real estate sort of organically brought me some of those referral connections
Hmm.
because I did get along with a lot of them.
Yeah.
Um, and as I was sort of rambling, I'm thinking sort of what sort of got me here is when you are younger in this. I think your success is dependent upon when you're doing these loans, if you recognize your guidelines and can you use them the right way.
Mm.
Because I do remember a couple of loans the first few years where it was on me that they did not get through. In man, you don't like that feeling. If you're a mortgage loan officer, you don't like it if you're the real estate agent referring, and you certainly don't like it if you're the client that stuff on a loading truck and you got two other deals you're affecting. So I
Right.
think being afraid of screwing up and doing that sort of set me forward.
Yeah. Yeah. No. All great learning experiences and lessons. Cool, man. Cool. Well, let's get into the VA loan process and VA questions. This is a simple question. What is a VA loan really? How does it differ from other types of mortgages, right?
Yeah. So the major part of this is that it's backed by the government.
Mm-hmm.
I think it's an excellent reward on the mortgage side for, people that serve our country. It's sort of best case scenario in the mortgage world. You usually need to put a down payment on most mortgage loans. The ones that you don't have to put a down payment, they come with mortgage insurance.
Mm-hmm. Yeah,
VA
right.
doesn't.
Yeah. Yeah.
So you've got no money down, you've got no monthly mortgage insurance, backed by the government, heavily backed by the government. So one of the things that goes into interest rates typically with most mortgage products is loan to value. So how much are you putting down? What's your credit score? What's your mid FICO score? So, it's as simple as looking at a grid and then that's where you land as far as rates concerned. You don't have that so much with VA.
Mm.
It's a really generous program for credit score and lack of down payment. So, simple answer, here is that no money down, low interest rates, no monthly mortgage insurance. And I would say as far as mortgage approvals are concerned, it's a more generous loan with as far as the debt to income ratio. It lets you spend a little bit more.
Yeah. Yeah. Cool. Good answer. Good answer.
Thank you.
Um, who is eligible for VA loans in Maine specifically? And I don't think it's
Yeah.
specific to Maine, but
Yeah. 6 years of service, Scott.
Yep. Yep.
It's really what it boils down
And does
to.
that service has to be continuous?
Yes. Yeah.
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 Yeah. So,
And I guess
go
once
ahead.
you have your 6 years under your belt, on the VA side of things, you're recognized, and in your eligibility of benefits, it creates that, it opens up that mortgage option.
Right. Right. What are some of the key benefits of using a VA? I wrote some questions here, so I'm reading. What are some of the benefits of using a VA loan for a home buyer in Maine? You talked about PMI insurance, right?
Yeah.
You don't have to have PMI insurance. What are some other advantages do you think?
Um, I don't, there's one part of it, Scott, that I don't like as far as and I'm pivoting here to answer, but
Mhm.
in a very busy market, sellers get very selective
Mm-hmm.
taking this mortgage product,
Mm-hmm.
and it's a negative as far as trying to get a veteran under contract, but it's a benefit here for to answer your question is that um, it's very selective on property condition. It wants a property to meet the eye test.
Yeah, I was kind of
So,
just going to go into that next question, right? What are some of the properties that you can use a VA loan on, right? And the conditions of
yeah.
those properties.
So we're talking about the no money down, we're talking about the lower interest rate, no PMI, but I think a little bit of a benefit that's sort of sneaky in a difficult angle as far as getting people under contract is, it's gonna get the veteran in, and it's making sure the veteran's buying a property that's functional. Um, it's a term called HUD's minimum standards. If you Googled HUD's minimum standards and you read that, it would spin your head sideways. Um, it's in simple terms, if it meets the eye test, it's going to be fine. If it
Yeah.
doesn't,
Yeah.
it's going to be flagged in the appraisal. And then, somebody like you representing the veteran needs to figure out how are we going to remedy this prior to closing. So
Right.
sneaky benefit for the veteran, a little bit difficult on the negotiation side.
Okay. Can you explain the VA loan entitlement and how it affects a loan amount veterans can borrow? Like, is there any amount that they can borrow? I mean, how does that work?
So it depends on, so they don't have a loan limit, VA.
Okay. Yeah.
Okay. It's in my industry, it's called an overlay, which means VA doesn't have the loan limit, but we're the lender offering the money, and there are decisions behind the scenes from people smarter than me that determine the guidelines within a mortgage product. We call them an overlay. Um, we'll go up to $5 million on a VA loan. Entitlement, and if you need to put a down payment, really depends on. So each county in a state has a certain loan limit. So we're at 760,000 and change. So that's sort of your jumbo to conventional loan limit. If you start getting above that using the VA loan, as far as the entitlement's concerned, there is sort of a behind the scenes calculation on if you need to fill the gap with a down payment in
Mm-hmm.
certain
Mm-hmm.
instances. But for the most part, man, no, you don't have a loan limit. Typically, you don't have to put money down, but if you are a user of a VA loan multiple times while still retaining a property. So let's talk about a scenario where maybe you have somebody in Carolina at a base. They bought a house in that area. They use their entitlement because of the way the market is. It's one of those things. They're coming up to Maine and they want to buy a house, but you know how it goes. There's not a lot of inventory. It's starting to correct itself a little bit, but
Yeah, I see that. I see more and more inventory happening. Yeah.
you're losing some leverage coming in. So maybe a seller doesn't want you to have a contingent to the sale of that other property,
Mm-hmm.
but you want to use your VA benefit up here in Maine. The numbers work. Let's say your debt to income ratio is fine, where you could carry two payments temporarily. Um, Depending on how much of the entitlement you used on the property you have now, and again, it's the spooky calculation behind the scenes, depends on county limits, depends on a couple of other things when I'm checking benefits, but you might need to put a little bit of skin into the game on the purchase here in Maine.
Cool. Cool.
Yeah,
So when you said, what'd you say, 760?
760
And
and
you
change.
said it was by county. So do you find that pretty much across the state of Maine? Because we're right now we're in York County, but
Yeah. I said per county. I should have described it as more of the the jumbo limit that's set forth from the census tract data that,
Yeah.
Fannie and Freddie does.
Right.
Yeah, so I reference county, I should say it's more of that.
Yeah. Which really led me into I mean, it's like I'm asking the question, you're answering this question, and the next question I'm asking is kind of spooky actually, is what are the current VA limits in Maine? You just answered it, right? So,
Yeah.
that's cool. I'm gonna skip on number 7. So I don't know if you know this. I got 15 questions for you. I know you got it under control, but
All right.
does the VA loan require a down? And we already answered that question. And if not, is there any circumstances where a down payment might be necessary? I mean, you kind of just talked about, right? If you're above 760 something, you said it. Would you? What was you didn't have a limit in terms of what the VA will fund. It depends on what the lender's willing to do. But at some
Yeah.
point, you're saying down payments can come into play.
Yep. Yep. So more specifically, that sort of the jumbo to conventional loan limit is 766,550. So
Okay.
being specific about that.
Yeah.
So then when you go above that, there's an entitlement calculation or a max loan amount that a borrower with VA entitlement can use. Um, it's based off of original use, subsequent use, if you have one outstanding now. I do want to default the answer to, because I could spin around about this topic.
Mm-hmm.
In theory, you typically never need a down payment.
Right.
You really only run into it when you have these larger loan amounts, or if you have entitlement already out there, which means you already own a property using entitlement. So a subsequent use is how they denote it. Um, I should describe. So I've got this screen on in the background that you can't see, but we've got some VA in most government loans don't have a FICO score requirement,
Mm-hmm.
but an overlay, if you will, in my industry is, when you have a credit score, your ability to repay is determined by your credit score.
Right.
So I always use the term people smarter than me in the room use analyzing risk will start putting credit score brackets. And our company does it where we will actually restrict the amount that you can borrow, even though there's a no defined max loan amount. We will cap it. So as an example, we'll actually give you a loan if you're a 600 or below mid FICO score. So we'll give you a loan up to that 766, 550. So if you're a 620 or above, well, the 600 to 620, now we'll go to 1.2 million, which if you think about that, a mortgage credit report is a 350 to 850 scale.
Mm-hmm.
Okay. 850 being basically you are a perfect credit borrower, 350. We've got some stuff to talk about. So when you're sitting in that just below 600 area to just above 600 area, you're middle of the road with your credit. You make some mistakes, you pay some stuff on time, but then you make some mistakes. So, your ability to repay is really designed through
Right.
those I always catch myself being too wordy, but really it boils down to you pay your things on time, you got high scores. But 620 to 600 will actually lend to $1.2 million, which in my mind is like, wow.
Yeah. No, that's cool.
What-
I used to think before I knew anything about VA loans that the VA loan was also rated upon what grade you were when you got out of the military. Like an E1
Yeah,
couldn't borrow as much as like an E7, right?
yeah,
But what I've learned is it's not that. It's about what your ability to pay is, where you're at when you're trying to acquire a VA loan, right? Could be
yeah,
years later, could be a month later, could be whatever, right? But it all depends on your debt to income, your income, obviously, and your credit score. So you could be an E1. You could have got out. You could have done, of course, you're not going to have 6 years at an E1, but I'm just, giving it a hypothetical. It wouldn't matter if you're an E1 or an O5, right? It's based on your ability to pay back that loan backed by the government. So really, I mean, I love VA loans, but um,
it's it's neat because so if you go 620 to 680, we'll give you 2 million.
yeah,
680 to 720, we'll give you 3 million.
yeah,
And if you're a unicorn, you're above 720 to 760 and above that, we'll give you 5 million bucks.
Well, I don't got a horn coming out of my head, but I guess I'm a unicorn right now. So, I mean, it's not that I could borrow that. I don't know if I'd want to pay it back, right? It'd have to have some pretty good, I'd have to have some pretty good reasons to be paying back that note.
FICO score is always an interesting conversation with me when you talk to spouses about what their
Yeah.
credit looks
Yeah.
like.
Yeah.
But feel good about a really good credit score. I mean, that is a badge, man. You've earned it. And
Yeah, I agree with you, and I'm not, digressing, but I just find it interesting. If I paid cash for everything, I had no debt, right? My father said, unless you have cash, don't buy it unless it's a house, right? But if I could just pay cash, I'd have no credit score, and there I would not be a great borrower. But I paid cash for everything. It's just interesting how our economy and how the whole lending process works. It's really based upon your ability to pay back debt, you know?
yeah, I mean, if you're paying cash for things, you're actually not utilizing credit. So you're not
Correct.
generating
A
credit
FICO score.
scores.
Right, right. And so they don't know if you're a good borrower or not. If you had to borrow, it's interesting. Yeah.
There's something that I want to connect to the sort of these credit scores is that, I mentioned this product is very generous with the interest rate.
Mm-hmm.
So when you do go
It's my
below,
next question, so I'll let you go. Yeah.
oh, cool. Okay.
Yeah. What are interest rates
So
like on VA loans, right?
it's most mortgage products, you're going to generate the best rate with a 760 mid and above.
Yeah.
With VA, if you're 660, you're generating a best case rate.
So in layman's terms, I'm over an 800 FICO score, but my rate, if I was a 680 FICO score, would be the same as my rate would be if I'm over an 800 FICO score.
Yeah,
That's a huge, huge benefit to, in my opinion, the VA and VA
it's
loans.
sort of an unheard of spread
Yeah,
compared to all those other mortgage products
right,
because
right.
you could use a conventional mortgage product at 660 putting 25% down, and you would be shocked how much higher that rate is compared to a no money down with the same FICO score VA.
Yeah,
Um,
yeah, yeah.
it's it's nice, but when you're a mid FICO score of 660 and then you start going down to 640, 620, 600, and then 600 and below, now you're in the area of like, look, you are a risk, and the quote unquote overlay now starts applying
Mm-hmm,
to the interest rate.
mm-hmm, mm-hmm.
And you're not to expect the same rate scenarios as the higher FICO scores or above the 660 in my example here. Um, but I still think it's amazing that you can get financing below that and it's still going to be a pretty attractive interest rate. So it's like, you asked me earlier, Chris, what's nice about the product? Let's spin in the same area. No down payment, no monthly mortgage insurance,
Mm-hmm.
low interest rates. It gets in lower FICO score borrowers. It's really nice. I I know that I keep answering your questions before you get to them.
Yeah,
I want to take a second to talk about why the interest rates are the way they are. Should
yeah.
I do
No,
that?
absolutely. Let's go.
Okay. All right. So this my friends call this downhill Bedard, by the way. This
Yeah. All
is
right, downhill. Don't get
yeah,
ahead of
this
your
is
skis, but let's go.
yeah, this is when the beautiful brain opens up.
Uh-huh.
Um yeah, I think it's beautiful.
We all have opinions.
Yeah, right. You know what they say about opinions.
Yes.
So every day, minute by minute, I want your listeners to know this because most of us pay attention to the stock market.
Yeah.
There's moving averages. We can see that big number on the Dow and the NASDAQ, and we know when there's a good day and a bad day.
Mm-hmm.
Mortgage-backed securities are a safe haven. Okay. They're backed by bonds. Bonds, it's a profitable investment, but it's not as profitable as when the stock market's pumping.
Right.
The stock market is pumping when things are going well economically.
I
Okay.
mean, I just like got 895. Well, no, it was more than that. 8,950. My stocks gained 8,950 yesterday.
Isn't that nice?
Yeah, that's beautiful, right? Stock
Yeah.
market was pumping.
Dude, let's
Not
do
trying
that.
to digress, all you people out there, just saying.
Well, somebody's listening and
Yeah,
thinking, that's
yeah,
cute, Scott. I made
yeah,
20K
yeah, yeah,
yesterday.
yeah, yeah. No, right. I'm on.
Yeah,
Yeah.
you're peanuts.
Yeah.
So, where I was going with that is that there is actually a sort of side by side scenario with mortgage-backed securities, bonds in the stock market. When we are in an area in the economy where we are not meeting expectations with economic reports,
Hmm.
that means things are not going as well as they're expecting.
Projected to be. Yeah.
You'll notice when these economic reports come out, and if you don't, the days that the stock market peels off, there's something that's causing that. It could be a little bit overbought. Okay, that happens. But most of the time, it's economic data. So I'm going to speed this up because I could really go minute by minute in this explanation. But you notice a peel off of money in the stocks. Guess where it's going? Because people aren't just going to put that money in their pocket. They want to
Right.
invest still.
Yeah.
It goes into bonds.
Yeah.
And that's what makes mortgage interest rates go down. When money is flowing into bonds, that is dictating the mortgage rate. It's a big thing for me to get your listeners to understand that when prime is lowering, that is not a mortgage rate. If Scott's a bank and I'm a bank, that's the Fed's suggestion of what we should lend to each other. As far as if I'm Bedard Bank, lending to Scott, Scott has suggested to take my money and turn around and lend it at the prime rate, and then you put your margin on it, so you
Right.
make money. Mortgages are not attached to that. We are legit minute by minute trading, and that trading is dictated by economic news.
Mm. Good to know. Good to know.
Yep.
I'm learning a little something here.
Oh yeah, let's
Uh,
go. Let's keep going. I'm feeling it right now.
yeah. What are some closing costs anticipated with VA loans? What should a veteran or even active duty expect in closing cost? And maybe you can address. I'm going to ask this question because I had this question asked to me just the other day with the whole new NAR settlement and what happens with buyer brokers, right?
Yeah. So the simple answer with closing costs using a VA loan is that um, it's dependent on two things. What's the purchase price?
Mm-hmm.
What are the yearly taxes on the property? Then we'll get
Mm-hmm.
into NAR. So when you're buying a house, guys, the state of Maine has a real estate transfer tax that's dependent upon what your sale price is. The title insurances, which is handled by the title attorney that puts the property in your name, that's dictated by your loan amount. The higher the purchase price, the more title insurance you need. So you have like these third party entities that come in when you're purchasing a house. It's not for a financial benefit for the lender. We cannot make money on charging money to borrowers for anything. There
Okay.
isn't any, we can't do that.
Yeah.
We were the black sheep of the industry when 2011 came around, and they said, guys, you're either making money after the closing with all the spookiness that happens behind the scenes,
Yeah.
or you're going to charge the consumer up front. So we don't charge. You can't have it both ways. But so you have these third party fees, which is an appraisal, your title work, your real estate transfer tax, your recording fees in the registry of deeds. Once you become an owner, that's recorded.
Mm-hmm.
And then on the other side of things, you have escrow for taxes and insurance. So if you're buying a property, let's say that's 750,000, it's probably going to have high tax figures. So you're buying a property in the middle of a tax cycle from a seller that's already prepaid taxes. So you need to reimburse that. Okay. And then we're setting up an escrow for future tax payments. So we have to put a couple months in that buffer. I guess, Chris, where are you going with all of these numbers is that when you're purchasing a property, the purchase price and the taxes matter. And just to give you a sort of a blanket scenario out there, it's like that $750,000 home, let's say it has $5,000 in taxes. You're probably going to be up by 9 grand in
Mm-hmm.
closing costs, and
Mm-hmm.
not a dime's going to me for financial benefit. It's legit paying those third parties and setting up that escrow for taxes and insurance. Um,
So how do you make money? How do you get paid?
yeah, that's a good question. So,
Yeah.
okay, so Scott makes money because when the property closes, right, there's a real estate commission. The
Correct.
seller has agreed to pay that.
Yeah.
On my end, this is where interest makes the world go round. Um, a loan is executed on the quote unquote secondary market. So that
Right.
is a loan now that is sitting there with an interest rate and a pile of money that was borrowed. It's going to go to it's going to get transferred to a servicer. So that's where you're going to pay your payments.
Right.
That servicer is going to grab that loan from us because it's going to make them money every month when you're paying your payment. Interest makes the world go around.
Hmm.
Why how do they get those loans? Well, they get them from me.
Gotcha.
So guess what they're going to do?
Yeah, they're going to pay you a little bump to buy the loan from you, pay you, you
Yep.
know, and then they acquire it and run their metrics to determine how much they'll make back based upon this scenario of this buyer over the
Yep.
course of the loan or what, you know, I'm sure they don't do it all the way out for 30 years. They probably have some metric in there, 7 years, 5 years before they refi or they go do something different, but gotcha.
Um, what's I need to say is that the state of Maine does not have a prepayment penalty.
Hmm.
What is standard behind the scenes, though, is that we are hoping consumers keep that mortgage for 6 months because it quote unquote performs, which pays everybody.
Gotcha.
Which,
So what you're saying, if I hear you correctly, is so somebody came out and bought the mortgage that you just closed, right? And this is how CMG makes money on the loan, right? Somebody paid it for it.
yep,
And that entity that bought the VA mortgage, the note from you, if you will, is hoping that that buyer is making payments for at least 6 months.
yep,
That seems way too short to me, but I mean, I'm not in the lending industry, right?
yeah. It's well, if you look at the front load amount of interest per payment,
Of course, right. It's all interest. You know, it's almost all interest in the beginning, right? It's just the way
it's it's
amortization works.
humbling.
Yeah. Do you have to escrow?
Yes, you do.
You do. So
Yes, you do.
somebody can't just pay their taxes separate. I get paying off the, you know, reimbursing the seller that they're buying the house from for back taxes and all that, but you have to escrow your taxes and insurance and a VA loan. You can't pay that separately and just pay the P&I, principal and interest.
That's correct. And the
Yeah.
reason for that, guys, is in my industry, 100% financing, great option again, but it's only allowed to be waived at the time of purchase as if you're putting 20% down.
Yep.
So in all of our conversation here, it's like most of our scenarios are 100% down, excuse me, 100%. So you wouldn't meet the requirement that allows you to waive it.
All right. And then how does the NAR settlement affect
Yeah.
VA buyers?
Yeah. So we need to describe that it's an issue these days where, well, it's a little bit of more of an over disclosure type of thing, right, Scott?
Hmm.
It's
Hmm.
like,
Hmm.
you're helping somebody sell a house. Now you need to create an over disclosure to tell buying brokers that there's a commission available for them to have if they bring a buyer. What if that seller isn't offering a buyer broker?
Right.
So what happens is that veteran comes in with their real estate agent, and the real estate agent does deserve to be paid. I mean, you are not working for free. Nobody likes to.
Right.
Um, so VA allows you to get up to 6% in seller quote unquote concessions.
Concessions. Yeah.
Yep. Um, the thing about that 6% is actually if you ask for a commission, it's actually exempt from that calculation. So it's like you're asking me the question, I'm rambling through the answer, but it is sort of best case scenario for a VA loan. It's exempt. Um, what that means is for whatever reason, if you got 6% of seller concessions and that was used to help, let's say, buy an interest rate down for a buyer, and you needed 2 points for yourself, Scott, that formula is 8, really. We're good because that 2% is excluded from that calculation.
Gotcha. Gotcha. Good to know. Good to know. Um, what else do I got here? Funding fee. So why is there a funding fee when you
Yes.
go in, right? So I think it's either what, a percent, I can't remember the exact numbers. There's a different funding fee, whether you're first time or you're using it a second time.
Yeah.
Explain a little bit more about that.
Yeah, so they call it subsequent.
Yeah.
It's so I'm telling you that you got all these best case scenarios.
Yeah, of course. Yeah.
And the reason why you do is that there's a funding fee. So when you borrow from the VA, you have this funding fee that you're allowed to finance on top of your purchase price, and that's for the perks and the benefits of the lower interest rate, of the no monthly mortgage insurance
PMI.
or
Yeah.
the payment. But you have to fund the program for the worst case scenario, which is people for getting foreclosed on. So if you're giving somebody 100% financing, what's the insurance to that? Because if all of a sudden you have a wave of those, you're going to be out of business if you're a lender needing to sort of take care of those loan amounts that are now not performing. So that little vig, if you will,
Yeah.
is used to fund the program, which is really the insurance behind the scenes.
Yeah. Makes sense.
Scott, a layer to this that is a benefit for a disabled veteran. So VA says to your disabled veterans, look, we are making you exempt from your funding fee,
Hmm.
which
What's
is nice.
what's the disabled percentage? Does it have to be 100% or can it be a lower percentage? Like
Um,
I'm in an actual process of going through some more of it, but do you have to be 100% disabled? Could you be 50%? No, there's a rating, right?
yep, fully disabled.
100%.
Yep.
Okay, good to know. What else do I got here? Some other questions real quick. Can you use a VA loan can you do like a construction loan or can you stagger it? Can you buy a piece of something here and then add on to it afterwards? Let's say you're building a property and you got land and you got to develop the land first and then you got to put a house on it, right? How does that work? Or does it all have to be built, all have to be perfect and then meet those lending guidelines in terms of what VA requires for a pretty good house?
Yeah, that's a good question. So there are three tiers. Number one, primary residence. Number two, is it a second home? Number three, is it an investment property? So focus on those three as you're sort of listening to me. Not you, Scott, but the
Yeah,
crowd
no, I hear
listening
you.
to
I
me.
hear you. I know what you're saying.
I'm not yelling at you.
Yeah, no, not yet.
Scott's a lot tougher than me, guys, so I wouldn't talk to Scott like that.
All right.
Um,
I'm humbler now than I'm older, right? As we
yeah,
get
me
older,
too.
we realize our bodies can't do what our egos think they still
Yeah,
can.
I
But
know. Let me tell
yeah,
you.
yeah.
So, Scott's asking about a construction scenario. The simple answer is yes. But a lot of these loans come down to, is it owner occupied? Is it primary residence? Is it a second home or is it an investment? So VA allows you to use its product a couple of ways. So you could buy something pre-existing, 100% financing. You could use it to construct a property. Those are hard, by the way, because what happens with that is when you're using a VA construction loan, you are not allowed to pay the interest that's due every month on the draw. The recipient of the loan is not allowed to pay that. So who pays it? Well, the builder's getting involved with this VA
Mm-hmm.
builder. I'm sorry,
Mm-hmm.
this VA client is getting
Mm-hmm.
involved with a builder.
Mm-hmm.
So if they're doing a construction loan, the builder has to pay it. So the
Mm-hmm.
builder doesn't want to give away money. Who
Right.
wants to give away money? So they're going to add it onto the purchase,
Right.
onto that
They're gonna
construction
build
price.
it into
So
it. Yeah.
that's a little difficult. But the third scenario Scott asked about is what if we buy something and then we want to improve it? You can do that. You can use VA to its term is purchase plus improvement. Where we need to focus on primary residence, second home, and investment property is that all of those options are available on primaries.
Okay.
Okay.
On your
None of them
primary,
are,
if you're buying it as a primary resident. Yep.
yeah, VA will not let you use their product for anything investment.
Gotcha.
Um, you can do a second home scenario, but now you're getting into some of those spooky calculations where I mentioned, you've already used entitlement. Now you're going to use it again. Now you got to come up with a down payment.
Mm-hmm.
Um, it's really nice, Scott, where if you have a buyer that's sort of a quote unquote investor, what if they're looking to buy a 1 through 4 family home and they're going to own or occupy it, but they're going to use those 3 units, 3 other units to help them monthly financially. You can use your VA loan for investment
So
per
that's yeah, because you're
purchases.
living there. It's a primary residence. You're using one of those 4 units. Is there a minimum? Could you buy a 2 unit with that?
You can
Could
buy
you
a
buy
two
an
unit.
8 unit as long as you're living in one of those units?
Oh, that's a good question.
Yeah.
So You could only go up to 4 units.
Okay. Yeah. Yeah.
We consider that residential.
Yeah.
Anything above that is commercial, so you can't use VA loans for commercial.
Gotcha. But if I wanted to, I'm living in an apartment and there's a house down the street and it needs work, some rehab, I could potentially use assuming I don't have a VA loan that I haven't used yet, I could potentially use a VA loan to not only buy that property, but help rehab it because I'm going to live in it once it's done.
Yeah, it's nice.
Yeah, that's cool. That's really cool. You
It's
know, I talk to people not a lot about VA loans. I mean, I am attracting a lot of veterans, and a lot of them have the VA kind of process worked out. It isn't their first rodeo, or they're very involved and they've done their homework. But I have talked to people that just have no clue. Especially, you kind of opened this up with sellers, right? It was like a black mark for a while, right? Now, I want to help out a veteran, but I got this other loan this other offer about this other loan, right? Maybe it's an FHA loan. Maybe it's a conventional loan, something. And the mindset was it's easier to get through inspections and appraisals and all that using some of these other products than it was a VA loan. I can tell you that I don't believe that's the case anymore. But what do you think about that?
um isn't this such an open for interpretation type of thing?
Yeah,
Because
yeah, yeah,
when VA borrowers come to us, they've got a property under contract. One of the things we have to do is we have to go to an independent website through the VA portal. Well, it's the VA portal.
yeah, yeah.
They farm it out to a local VA appraiser. Scott, what do we know that that appraiser is going to say once he goes to the property? Because
Right,
I was talking about that HUD's minimum standards, and if you read it, it spins. The eye test comparable, or the eye test thought that I had is, you know, it's really going to be determined by that appraiser. Like, what is that appraiser going to say?
right,
They're supposed to check local codes when they're looking at properties. So that means if there's a railing that should be going down into a basement, or if there should be a railing on a front porch, they're supposed to check for that. But like, like cracking a window, a plate on a light switch, the roof, the expectancy of the roof, that's a big one.
mm-hmm,
The
mm-hmm,
appraiser looks up there and says, geez, that's got less than 2 years.
mm-hmm.
That's going to be an issue. So I guess I don't see it where I think it's super strict like it used to be,
Yeah,
Scott.
yeah, yeah,
Because I think market conditions sort of shift mindset.
yeah.
They are still doing their jobs. So if it's obvious that the property needs a few things, it's going to get dinged. But
Right.
if it's in the area of like, anybody can, kind of take care of this, it's really not that big of a deal. I'm noticing a little bit of leniency in some of that thought process.
Yeah, yeah, yeah. I know we did a loan together with a client a few months ago, and a lot of those things that you're talking about got dinged by when they did the inspection, when they were doing the due diligence, and the seller realized that they had to fix some of those things anyway. So by the time the appraiser got there for their VA loan, it was already rectified. But they weren't big things, right? They weren't. So, and that loan went pretty smooth, as you know. So,
It's I think we should relay that we are on the opposite end of a lot of seller leverage these days.
yeah, yeah. No, yeah, I agree 100%. All right, I got two more questions for
All
you.
right.
All right, you ready?
Yes.
How long does the whole process take from VA loan approval processing typically in Maine? Like, I'm a veteran, I'm going to come to you. I'm thinking about using my VA benefits.
Yep.
What's the process? How long does this process take?
Yep. Technology drives a lot of things, guys. We could certainly do things over the phone. But if you're hopping in my app and you submitted a loan application, it hits me over the head. I turn over pre-approvals within a day or less. So you're going to know what your number is. I'm going to check your eligibility. I kind of go through that due diligence part of, making sure I know what you're making and all of those things.
Yeah, yeah.
So now you've got a pre-approval and you're going to go to Scott. Scott's going to show you houses. Eventually you're going to get one under contract. That period of under contract usually takes you about 30 days or less.
Mm-hmm.
If we're in an insane market where like we were a few years ago,
Yeah,
VA transactions were taking 45 days. I mean,
yeah, Yeah,
There's only a certain number of VA appraisers around here, so as the
right.
volume spiked, they were jammed up. But in short, about 30 days.
So a lender, buyer comes to you, or a homeowner or soon to be homeowner, you get them all set up. I get approval letter from you. I'm showing this client properties. We make an offer on a property, it gets accepted. When does the interest rate lock in so they know, right?
Yeah.
Because there's a
Yeah.
difference between the pre-approval and
Yeah.
when the interest rate locks. Because you could be looking for property for 3 years, you don't know, right? So
Yeah.
when does that happen?
Yeah. You know what? That's a really good question because once you have a property address to lock,
Yeah,
that's when we can lock. And you don't have that property address until you go under contract.
right,
But I was talking about mortgage-backed securities. I was talking about economic news. I'm
right,
lighting up a little bit because this is where I nerd out.
yeah. Oh,
You know what
I've
I
seen
mean?
some of your data. I was like, Jesus,
Yeah.
yeah,
Yeah. Yeah.
yeah,
20 years into this, mortgage guidelines adjust and change, and it's easy to adjust with them. It's old hat. The
yeah,
fun part of my job is actually paying attention to mortgage-backed securities. So
right,
where I'm going with this is that we can lock your interest rate right away. But if I'm seeing a cycle and I empower my clients to look at this, I show them the charts. I'll do FaceTime and show them my website. I'll
yeah,
send
yeah,
snapshots. But if an interest rate or if the movement of the trading looks like rates are going down through a 30-day period, I'm going to suggest floating.
right. Because you think the trend's heading down, and then when they lock, the rate will be less than when they locked if they locked right away, right?
Yep. And there is some risk in that
Of
because
course.
it's like a moody child. The market can swing as quick as that. And what if I have a day off? What if I'm taking a random day off? What if I'm not feeling good? I'm not in the office. You know
Mm-hmm.
what I mean?
Mm-hmm.
Then you're taking that risk also that, I'm sort of there to help, or
Right.
I might not be. So there's a lot of back and forth of that. But for the most part, I find that you can lock it right away, but you can also take my advice to chase it lower.
Yeah, I think that second option is going to come more and more into play as we're coming down off these higher interest rates. And again, not trying to get political, but with the new administration, I potentially see rates even coming down further, right? So maybe if you're out there, guys, and you're looking at a VA loan, whether it's with us or anybody, with Chris or working with me, just take that in consideration. We're not a Nostradamus, right? We can't predict the future. Just looking at trends though, and Chris, back me up if I'm wrong here. Are you starting to see things maybe start? I mean, we have seen rates come down, right? But
Yeah.
do you think that trend's going to continue?
Yeah, two things with it. Number one, when inflation's tame, that's good news for mortgage interest rates to begin with.
Yeah.
When we have high inflation, that means the cost of borrowing was too low across the board. Rates need to go up across the board. So we're on the opposite side of an inflation spike. So, okay, so that foundation is in a nice area. So now we're going back to fundamentals, economic data. So you were just touching on it. A couple of major things here: retail sales, manufacturing, those are backbones of the economy.
Mm-hmm.
The jobs report, that's another one that
Mm-hmm.
happens.
Mm-hmm.
But I'm starting to see certain sort of industries starting to stagnate. The consumer is not as powerful with their finances right now in this
Mm-hmm.
current climate. So that means retail sales are stagnating a little bit.
Mm-hmm.
Manufacturing doesn't happen.
Overnight.
That
Yeah.
slows down because things aren't selling as quickly. So
Yeah.
it's ultimately good news for us.
Yeah. Cool. Last question, buddy. What advice would you give Maine veterans who are just starting the home buying process with a VA loan?
Okay, this is a feel thing. Okay, this is an emotional thing. One of my heroes, Scott's gonna laugh at this because he's a Raiders fan. I watched the great Bill Belichick for 20 years. I know how to be stoically operational. I mean, I have a personality, but I guess where I'm going with that is you might be emotional about this. Like you might be emotional about where your credit score is. what you've got for finances, what you have for debt. For me, in the Belichick scheme of things, I need to cut through that because that's noise stuff.
Hmm.
I just need you to trust and sort of let go of that emotional aspect and just put in an application. It's really the answer to everything. You can be on A in whatever letter you're going to get stuck on to Z. I am a Z guy. I need to see that application. That's where Z sits for me. That's really my A. So let's just get there. Just trust the process. And if you're dealing with somebody, and it doesn't have to be me, but if you align yourself with a lender that does know his product, that does respond to you, that is sort of okay with guiding you, and you can tell, you
Hmm.
know,
Hmm.
we're good as consumers. We could tell if we want to work with somebody. Um, if you could trust that and just get that app in, it's really going to drive the bus. Um,
Awesome.
I have to slide the great Bill Belichick in there. Sorry, Scott.
Listen, you can slide the great Bill Belichick in here. I'm going to ask you, was it Brady or Belichick?
Um, I mean,
Asking.
Tom was everything for them. You have to have a quarterback. I think everything starts and stops with a
Okay.
QB.
Okay. With that being said, who owns 10% of the Raiders right now?
Tommy Brady, baby.
And when did his career start and Belichick's career start? And
Yeah.
when did the Raiders start going down? Do you recall the Snow Bowl game, the
Yeah.
Talk Rule game, the last game at
Yeah.
Sullivan Stadium, where the Raiders, this is not looking good, but where the Raiders started going this way and the Patriots started going this way. And it's been brutal for a long time. Now you're back to my level, right? We're
Hey,
in misery together. I just been in misery for the last 20 years living up here in country. And pitch.
I keep going if you want.
No, no, no. I'm good. Thank God I'm a Bruins fan. The Red Sox have been kind of, not great lately. And a Celtics fan, obviously, is, but yeah, yeah, it's all good, man. I don't see any,
Well,
like me, I don't see any Patriot stuff behind you, but I
what do
do
we
say a
got?
half of a hoop. Oh, there you go.
There's some
Yeah.
stuff there.
Yeah. 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 A few
Um,
things. Yeah.
what's funny, man, is I have some family on my wife's side that they're Buffalo Bills fans.
Oh, yeah. See,
I
that to
mean,
me would be worse if you're a Patriots fan because it's the same division.
man, they got their tail kicked by us for
Oh,
years.
yeah.
And, it was always Tom this,
Yeah.
Tom that.
Yeah.
Whenever we were together, a lot of them live in Florida. We see
Yeah.
each other a couple times a year.
Yeah. Yeah.
And I would just take it because, I'm sorry, guys. I really can't hear you over these rings type of
Yeah. Yeah. My
philosophy.
rings are, you're bouncing off, the noise is bouncing off my rings. Yeah.
It's I do enjoy the team building aspect of sports. So now
Yeah.
I'm in the humbled area,
Yeah.
and you
Yeah.
can you can honestly say this. Everything starts and stops with a QB, but is that QB being taught correctly? So
Agreed. I agree.
is it Brady? Is it Belichick? I think it starts with coaching, but is the talent at quarterback sort of going to drive that bus?
Yeah, it was originally. Is it the system or is it the quarterback? Right, it was the big Belichick Brady debate, and then Brady
Yeah,
went to the Buccaneers and won another Super Bowl. But I don't know. I'm not a obviously I don't play in the NFL. I just watch it, and I can be an armchair quarterback all I want. I am doing pretty okay in our fantasy league, but you just never know. So listen, buddy, this has been helpful. I'll have this. I'm gonna post this for all of you guys out there. We've been doing this a couple days prior, but this is going to be posted on Monday, Veterans Day. And if you have any questions, comments, you want to know more information about a VA loan, guys, then send me a comment, send me a text, send me an email. I'm gonna put Chris's information in my link below in the video that you could reach out to him directly too. But this is very helpful, buddy. I appreciate your time. We should do this more often. Do you know you are the first lender that I have interviewed on my channel? The first one, man. So there you go. It's your first ring.
it's I'm excited. I just, I feel like a lot of people are going to listen to this. I like what you're doing. And, thanks for having me, and everybody, thanks for listening. I mean, if Scott connects us, I do have a YouTube channel going. I'm not Scott level yet, but I'm hoping
Dude,
to
we
get
all got
there.
to start somewhere. I told you what you got to do, man. You just got to keep
Just
going
do
at
it.
it. Yeah, you just got to break it down and keep going. You got to push through it's tough in the beginning. It is. You just got to keep going.
Yep.
All right, buddy. Well, enjoy the rest of your day and we'll see you soon.
All right, man. Thanks for having me.
Yep. Bye bye. Guys, I hope you found that information, that Q&A, beneficial. And, if you have any questions, reach out. Chris's information's below in the description, along with mine. We're here to help, guys. We work with a lot of veterans. I work with a lot of veterans. I know Chris does as well. We've worked together on some loans that went really smooth and helped some veterans move into homes here in Maine. So again, it's all about you guys. It's all about trying to help you get educated in what's going on in Maine and how we can make that transition from wherever you are today to wherever you want to be in Maine as smooth as possible. So I hope you enjoyed this video, and we'll get back at you at another time. All right, guys, Scott Tebow over and out. Bye-bye.